BlackRock reporting its earnings results. And you're looking at some pressure on the stock with shares off just about 1.5%. Beat profit expectations with the asset management giant saying that its technology services revenue grew 20% on a year-over-year basis. But digging in to some of these other numbers, revenue essentially was in line. It was up, yes, 5% on a year-over-year basis. Profit was up 14%, but some of the inflows or outflows is really what's sticking out to me in this report. Clients pulled $13 billion from long-term funds during the quarter. Net inflows for the quarter falling to $2.57 billion. That was down from $16.9 billion last year. Like $49 billion of net outflows for lower fee institutional index equity strategies here, including $19 billion from a single international client. So a lot to digest within this report. Not necessarily surprising when you talk about the fact that investors were very skittish, very nervous about what this quarter and what future quarters are going to look like when we talk about all the uncertainty out there right now. Here in the U.S., when it comes to Fed policy, also geopolitically, when it comes to some of the new risk that investors are assessing. But again, this report clearly not as strong as what we saw from the three large U.S. banks.
It's not, but I'm still excited. You know why?
Why?
Because we finally have fresh commentary like this from Larry Fink, Chairman and CEO of BlackRock. A new earnings season has dawned on us. However, here's what he has to say, and this could set the tone for a few of the other banks that we have yet to hear from, even though we ran through Wells Fargo, Citi, and of course the behemoth that is JP Morgan earlier today. Here's what he says, and this could give you a little bit of the inclination around some of the investor mindset right now, saying for the first time in nearly 2 decades, clients are earning a real return in cash, can't wait for more policy and market certainty before re-risking. So what kind of trade then does that take off the table, man? Well, it might not mean rush back into some of the riskier assets that are out there in the market, but when you think about where BlackRock and where they're seeing and comparing periods like this of uncertainty to prior periods, they're looking back to 2016 and 2018 even. Remember the fourth quarter of 2018 and how dismal that was. So all of this considered here, I think when those clients are ready to put their money back to work, for where those risk assets get picked back up, naturally tech is one of the first places that starts to get nibbled at, and then we'll see where else the major banks and investment houses are advising their clients to move towards, because we could see a larger kind of big trade initiated there. But again here, I mean, still looking across some, and this is also a big technology business too. BlackRock, Aladdin there, delivering benefits of scale to clients and shareholders, saying that they got margin expansion, 14% growth in adjusted EPS year over year, technology services growth as well, about 20% of the same period of time. Exciting time for
You sold me. You sold me.
Sold?
Yep.
Sweet. Done.